Good turnaround Tuesday, Warriors. Everyone, we will rock you. Everyone ready to rock? Turnaround Tuesday, Golden Weight. How you doing, AJ, Mike, Ingmar, Blake? Um, well, AJ's here, Steve, Ryan. We have a full house. Stel's here. Brand, thank you. Saloom, how are you? You got your pom poms today, buddy? Uh, Ben, how are you? Parts Majitha, you're new here. Welcome to Face. All right. So,
Hey, by the way, Coach, good morning.
good
We will
morning,
have,
man.
President Trump will be on CNBC like literally any moment now. So,
Okay.
might be some headlines because he's joining Squawk Box on CNBC. So
Wow.
we might get some headlines while we're broadcasting here. So just in
Oh,
case I
cool.
jump in and rattle off something, you understand why.
Yeah. Okay. What's the topic? Is it going to be tariffs?
Everything.
Uh, yeah.
I'm
Anyway,
not in the Epstein files. That's what the topic is.
the
Not in the
problem.
Epstein files.
Yeah. Okay. I remember I used to have an index file with all my big customers. Anyway, gold. So golden weight. It freaks some people out up here. 80, I think this was 61.8 back here. Now, there might be another rally in gold if, because I think this dollar rally, guys, I don't know. I'm still looking for a retest of the breakout. So I'm thinking maybe we're like A, B, maybe we get up to 99 and then one more pullback. So it's really, uh, you know, in no man's land for me right here. I think I'll be able to get it under 98, and I'm still going to wait for 1650 or so in euro. And even though it's down again today, I mean, this could still be some kind of flagpole here. It could pull back to 15 and then make that last push. Some equality will take it up there, 16 and a half to 17. So I'm not trying to be patient. I'm being patient. Okay. It does feel like I'm trying, but I'm just being. So anything you put try in front of, you're really not doing it. Okay. So you're discounting what you're attempting to do mentally in the markets. So don't say you're trying to do anything. You're just doing it. Okay. Um, Here's the other big question. I'm going to go around in the crew with this one, then I'm going to turn it over to Stel. Big question. Okay, so some people are saying they expected this kind of strength after the close we had. Question is, new highs or failing rally? Let's do a survey here. New highs. Let's go around the horn with our guys and out there, you guys. Failing rally or new highs? What do you think?
New
Just
highs.
new
New
highs.
highs.
New highs. Two new highs here. Main limb, at least you know what you are. Okay. Failing rally from Brand. How about some of the other shooters out there? Saloom saying parabolic. Oh, there it is. New all-time high. That monthly candle wants some blood. You are the most violent bull since I was in the arena in Mexico with my cape. All right, so you want blood, even though it's happy days are here again. Anyway, everyone's a bunch of angry traders. So let's start with Stel. Stel, I'm going to give you the screen so we could look at your clean charts. Oh, he's going to be
Thank you,
questioning
sir.
NFP.
So
Yeah.
let me take this screen, share desktop one.
Where do you want to
Well,
buy silver?
well, we'll get to that.
All right.
The question is, we've had quite a bit of important data. So CPI, sorry, core PCE and PCE were 0.1% better than expected or higher than expected, but payrolls were not. And we all know Trump is having a go at the BLS. For what? For actually publishing the correct numbers for once? I don't get it. And also, and if you think about it, the numbers, the NFP numbers from BLS actually give him, give the Fed more leeway, more confidence to actually cut rates, which is what Trump wants. So I don't understand what Trump is trying to do, but
Why don't you give up on that?
sorry.
Give up on trying to understand.
Yeah, no, you're right. You're right. There is no logic, or it seems to be no logic. But in any case, for me, the bottom line.
It's all emotion.
Yeah. For me, the bottom line is that inflation is kind of sticky, quite sticky where it has been. And the Fed have told us in the past that really the focus is on employment. So if we do get more negative or more weak employment prints, and we're hearing all the time layoffs, layoffs, layoffs everywhere. So I think that cuts are coming, and I think next meeting is a for me is more likely that they are going to cut in the next meeting. I don't know what the market's pricing. I haven't looked at Fed fund futures, but they're definitely not fully pricing anything.
I'm hearing
So
people talking he's going to go a half.
half, yeah, maybe.
I don't think so.
But yeah, bottom line though, the more important thing is not really where overnight Fed fund rates are. The more important question is where the term structure of rates is, where 10-year, where 30-year is, because that's really what pushes markets and real estate, mortgages and all that. If overnight is at 450 or 350, it's not a huge deal. But if 10-year goes from 6% to 3%, that is a massive deal. So I think what we should be focusing on is not really that much on how many cuts is going to be, or rather what the chances of the Fed restarting QE. And I think that's way out of the radar for pretty much everybody. And I think that this is not the case. I think that the chances of them restarting QE are a lot bigger than people think. And maybe it's not going to be called QE or whatever, but I saw a tweet from, I can't remember who it was, I'll find it, that the Fed bought 2 billion of long dated bonds a couple of days ago. And, it's something that I think is going to be on the radar, and it's not at the moment. So we have to be patient. And like you said, Dale, you have to be patient. Otherwise, you'll become a patient in some kind of clinic, right?
Yeah, that's a good one.
So anyway, so let's keep going. So yields, I think, look, this is a very important level we're at here in the 10-year US. It's a 50% of that big thrust from the lows in end of 24 to the highs in early 25. And we've tested that level quite a few times. It seems it's been pivotal, it's been important, and I think we're going to go lower. And I think we're gonna test that rising trend line. And I think that most likely we're going to break below. That remains my core view. And in line with that, if that happens, then I think that the dollar will have one more push to the downside. This is what I had drawn a little while ago, weeks ago. April. And I think that's the ultimate target. Yes, we are having a counter trend rally, but I think that's the ultimate target. And that's a level where I'm going to get very bullish dollar or close to that level. So for now, we're kind of going sideways. Of course, we are rallying recently in the dollar, but if you zoom out a little bit, it's just noise, right? In the grand scheme of things.
Yeah.
So that's
right now it's only 3 waves. Okay, you have ABC.
Okay.
So that's another bearish argument right now.
Yeah. So that's my big view. If that happens, then what happens to, we'll go to metals in a little bit. What happens to the S&P and equities? Well, I think they go higher. Yeah. Again, this is what the market has been telling us for a while. Yes, you do get the odd panic move lower, but it gets bought straight away. So every dip gets bought. I don't think it makes sense for us to go higher, given the whole geopolitical environment, layoffs, employment not doing great. Yes, inflation is sticky as well. Yes, okay, maybe if rates go down, obviously that's a tailwind for equities. But overall, in terms of the general economic environment, it's not a time to be looking at all-time highs in equities, but we are. So that's what the market's telling us. So for me, path of least resistance remains to the upside. No evidence of the contrary. So what happened? Actually, I was looking at the 10-year US 10-year gilts are also very important. Look where they are. They're at a very important level and looking to break down as well. So that I'm watching as well. So if the dollar drops and yields drop, what happens to metals? Well, theoretically, we keep going higher. The the danger in being long metals, which I am still long, I only have half the positions though in silver and platinum. The danger is that we get some kind of a crisis or I don't know what event and everything gets sold. In that case, we've seen in COVID, gold gets sold, silver gets sold, everything gets sold. So that's the scenario where being long metals is risky. But I mean, look at this consolidation. Look at what gold's done over the past 2 years. Incredible. I mean, absolutely incredible. If you want to look at the bull market, this is it. So, and
Well,
every,
let me ask you something. How do you know it's not distribution
you don't. But the thing is,
instead of a consolidation?
well, we'll know when this resolves.
Okay.
Because last 2 years, every time there's a move higher, then sideways consolidation, move higher, sideways consolidation. It's exactly the same now. We don't know it yet. If we break below 3100, then I think that's it for this bull leg. But for now, I have no other view. And silver is underperforming gold now. Gold silver ratio is back towards 90, but it's still trading within this channel. It's been doing very well. It's gone 50% in a year and a bit. So that's been a very good move. And for me, we still respect this channel. We bounced off the 50 DMA. No evidence of the contrary, of anything other than being bullishes. And platinum is similar. Of course, platinum has been underperforming the last few days, but I mean, look at this move from 900 up until 1450, almost 1500. Of course, you're going to retrace. There's a zone here which I had marked. There's a 50 DMA as well, where we're bouncing off that. I think this will also go higher, unless, again, as I said before, we get some kind of event which brings everything lower.
Well, the event could be that the dollar lows are in.
Yeah, maybe, yeah.
I really think that's the linchpin right now
Yes.
for everything we're talking about. The dollar lows are in. We could get a correction in gold, and
We could.
it could still be a correction in the Dixie and rally to 102, 103, and then make new lows. That's a possibility.
Yeah, we could do. Yes.
So
That
anyway, I'm just
101, 102 is an area of
yeah.
interest for sure. We could
Yeah,
have that, yeah.
so I'm just saying, I'm being Phil Donahue. He was always the devil's advocate.
Yeah.
So, how'd I do, devil? I really don't work for you. Anyway, go ahead.
No, that's all. And in terms of currencies, there's nothing that really catches my eye at the moment. We're all kind of in no man's land. Euro, pound, it's all kind of obviously with the time frame that I look at things. I'm not a day trader, so for me, there's nothing really that catches my eye. Blake was spot on with dollar mex bouncing off
always,
these levels.
he always is.
He always is, yeah.
He can smell this peso. It's like
Yeah.
it's like having a burrito. The guy knows.
I smell tacos. I smell tacos.
Blake is really, really good. Sometimes. No, most of the times.
It's from the time where he learned as a teenager in Tijuana.
Actually, that was Rocky Point, Dale. Thank you very much.
All right, okay. When you were a Marine, you were down there.
Yes, sir, I was.
All right, you're busted. Okay.
All right, I'm pretty much done, so I can pass it over to Blake.
All right. K-Man's here too, so Blake,
Okay,
you want to
K-Man.
work him into?
Hey, Dale. Hello, everybody.
Hey, Kay, how are you? Anything
very well, thank you.
Anything top of mind right here, bro?
I'll guide the charts.
Okay, go ahead, Blake.
Top of mind today. As I said this morning, it doesn't seem like the market still wants to get full whack short dollars yet. So we will be ISM data watching. I think the services data going to be the driver for the day. Kind of, as I said this morning as well, kind of expecting those corrections in in the metals, silver is holding up extremely well because I thought with a
Yeah.
bit of that risk off that we saw, that the gold silver ratio would actually spike quite a bit more, and gold silver is still trading around the latest highs. It's tagging along some kind of trend line that I have.
I'd love to see 38 for a sell.
Um, well, yeah, I think, okay. I mean, bigger picture, I think we're still on the way to 41,
Mm,
$41, and that's where I think we're heading towards.
I do too.
And yeah, for the rest, there's not a lot that is really pushing me to have too many positions right now. Um,
What are you doing with crosses, bro?
well, actually, I'm a little short Euro Aussie again, and
Okay.
just with a close eye on the stock markets. I think the Aussie is still one of the currencies amongst peers. And I'm not saying specifically versus the dollar, but it's still one of the currencies that I kind of like right now. Um, yeah, for the rest, I really I'm fooling around in stuff, but I'm not really diving into any big positions right now.
It's hard to have conviction right here, isn't it?
Yeah, it is because I bought gold on Friday, then I sold like already three-quarters of it out on that spike there, and I'm just waiting. I'm just wait. Really, I'm waiting to do anything bigger right now. I've got a couple of things running, and that's it. I'm keeping like quarter of the gold. I'd love to see a move perhaps back into the 33, 10, 25 zone to try and load them up again. Um, yeah, I, I
Yeah.
I was a little long euro sterling, and well, I actually forgot to take it out, but I got stopped on that. But it's still I still think it's a buy on dips, that one right now. But for the rest, very little that really pushes me to have positions that I really want to have. Dale, you understand the
Yeah.
difference
Yeah.
between the positions that we sometimes take to accompany the moves because we are traders, but then positions that I really want, there's few of them around.
Okay. All right. So, you say it like you see it. So, Blake, let's talk about S&Ps. Do you think we're going to get a failing rally here or blow to new highs for the
Well,
one millionth time?
I think, well, we're at the 618, and here's the I I believe that we've, started to already crack, but you can't rule out further a further rally because when we were talking about this wave five, the wave five 127% extension, which was at 65.25, is what it's been
Okay.
on our radar, for the last couple months. Now that we're falling short around the 6400, and it wasn't like oh, we're just rolling over. It's also, we're in the last month, really the last month of summer, and it rolled over due to a weak jobs report. So that it was a catalyst, in other words.
Yeah.
I am a little bit more skeptical about us making new trend highs now. So
Okay.
I'm now more on the defensive instead of saying, yeah, this pullback is just a pullback to buy until we get to 65.25. Now that we came off so aggressively because of Friday's data, I
Yeah.
am very skeptical. And not so that comes to today and next week. So today we have ISM services data. Now most people will say, well, that's ISM data, it came after the jobs report, so I don't really care. But that's not true. When we get ISM following the jobs report, we still usually get a decent move because we are a services economy at this point. So the ISM data today, even though the market's looking, I think, for 51. Let me double check my numbers really quick because it comes out in about an hour and a half. Today's ISM 51.5 is expected. It- you know, as long as we don't get below like 51, getting closer to the 50, um, what do you call it? The expansion contraction level. We get below 50 and then that's going to get ugly. But as long as we stay above 51 or so, I think that'll be fine. But we start getting below 51 and then you might see equities come off. And then we have CPI next week. So I'm I'm gonna, utilize these data points to navigate around the spoos rather than,
Yeah.
just make an assumption that we're gonna make new highs again. It does look broken at this point. How do you feel, Dale?
Uh, yeah, I think, everyone's proud of themselves if that they bought a bad close. There was a key reversal up there on the S&Ps. Well, you
Yeah.
don't have it. That's a 4 hour, but the daily was a key reversal.
Oh, yeah, it was a
So
bearish engulfing. It was a
yeah,
bearish engulfing. And
yeah,
that was Thursday actually. So,
yeah, yeah. So you have to give that the benefit of the doubt. Um, so if you didn't catch last week, could be an opportunity to take it that back down towards. I still think 6140 prior highs, and then you're looking at 6,000.
all
I'm
right.
I'm
Yeah,
still
yeah.
there.
You say 6140. Yeah, and that's this level right here, which is the breakout
Yeah,
point, 61.
yeah,
I have it at 6150. It doesn't really matter. It's
yeah.
tomato, tomato. It's right around there. And I agree with you. We get below that, and then that's more of a signal to me that hey, we got to be really careful with equities. By the
Yeah.
way, speaking of
Maybe
Trump.
that's why the bonds are acting good lately, Blake. Maybe there's, some money flow thinking they want to lock in rates here, first of all, and not have the exposure with what's been happening with IPOs and memes, etc.
Trump's saying that I will announce pharma tariffs within the next week.
Oh
Switzerland
my
makes
God.
a fortune on pharma, but he also goes on to mention, and this is something that was we were looking for on August 9th, which is by this Saturday. So guys,
China.
just again, if you're this is Trump. He's talking, and you can actually see the Swiss franc actually strengthen a little bit on that headline. You see the Euro Swiss just slipped down to the 40s. If you didn't know that, and you're in the dark and saying, "Oh wow, what do you mean? There's pharmaceutical tariffs, and what about April or August 9th?" You guys need to be in the chat room. Like literally, we've been talking about this since yesterday. So if you're not in the chat room knowing all of these dates, the headlines, why the market's being driven one direction or the other, and you just feel you're like out in the blue, take advantage of this sale, get involved with the summer sale, which takes our monthly month to month down by 40%, and jump on the prices that we haven't had since 2019, because when the prices go back up, you'll be locked in at these prices. So anyway, that was a headline that just came out just a moment ago. He said he's gonna raise India tariffs substantially over the next 24 hours. He's really going after India, partnering up with
The
or
BRICS.
buying Russian oil. Holy
Yeah,
cow.
yeah, and they're a brick nation.
They are. Let's
Yeah, it's all about the BRICS.
all about the BRICS. Minus China. China's. I think.
Exactly.
Was it you guys that were
That's
talking about it
because
this morning on the
they're
floor
Yeah,
the
show?
brick.
yeah. I was speaking about that on the Flow show. We
Yeah,
were talking
China.
about it.
Yeah, China will be excluded because it is too important. It's too big. But everybody else, they are in the crosshairs. And here's the Nifty 50, just the Indian market. So just seeing where it's at. It's kind of mid-range in this rising channel.
Trump owns the Ukraine war now too. It's his war now. So, we'll see. Maybe he's going to get a deal this week before his deadline.
Well, you know what's not going to happen, and one of the things that you saw, this Netanyahu this morning, He was on the wires, and he was saying, what did he say this morning?
What country are they going to invade today?
No, declares commitment to defeat Hamas and free hostages. I mean, so
So he's going to
that's not
go
going to
on
let.
with the war. Yeah,
What's that?
that's another year of war to defeat Hamas.
Well, right. I mean, it's just going to keep the pressure on in the Middle East, just generally speaking. So, I mean, I don't know. Trump's losing the fight as far as trying to be the peacemaker here. So we'll
No
see.
Nobel Peace Prize.
No Nobel Peace Prize, maybe not. Well, let's go around the horn and figure out what everybody's looking at today. Because I'll tell you exactly what I'm looking at today. But I'll do that last. Um, Ryan, what are you focused on today, going into ISM and everything else?
I'm going to keep an eye on those yields. Tens at that 420 level. We're hovering around it, but we're sort of holding it. Made a little blip last night. And I'm keeping
So
an eye on
what do you do with it? I mean, what if yields break down? What are you going to do?
you want to see them closing below that level.
And what are you going to do?
Well, it's going to define what I'm going to do with the dollar because I'm long dollar MEX off my big 1850 level that I've been pointing out for months and months. So we finally got down there. We've had a decent bounce. It needs to get above 19.
But if yields break down, what are you going to do with the dollar max? I mean, you tell me you're going to do something with the dollar, but what is it? You haven't been clear on it.
Well, I believe I back to my longs because that's 1850 level is still very valid as far as I'm concerned. Waiting for it long enough. So yeah, but it needs to hold, but it's going to need. I think it's going to take something big. So
in other words, if yields break down, you're selling your dollars.
No, I'm going to add to on the dip.
Oh, okay. You're going to use a dip in 10-year to buy a dollar dip. Okay. All right.
Yeah.
I'm just trying to be clear here.
Yeah.
Okay.
But I'm in management mode as well. Same with dollar CAD. That's trying to get up above the 138, 38.10. Struggling a bit, so we got a bit of a range 137.55, 138.10 to keep monitor of. If we're moving outside of those ranges, we're either going higher or we're going much lower. So yeah, there's a few pairs to keep an eye on. Dollar yen, it's as well. It dipped. It has been walking hand in hand with tens because it dipped under 147 down to 146.60 when we got that blip in 10 years to, I think it got down to 418 before recovering. So that 147 level is still key because we're not managing to stay below it for any length of time.
Got it. All right. Well, K-Man, what are you thinking today?
Oh, I already
You're not thinking anything.
Now listen, it's as I said, the market is not convinced yet. It should sell dollars after that jobs report because that was one which is probably counterweight a little bit by, let's call it, before pen really gets to paper, victories on the trade deals in a way for the US. We've been discussing that last week. And now it needs conviction, one way or the other. Maybe we get it on the ISM data coming out later, uh, where we have to really watch those that employment component, because if it gives confirmation to the dollar bears, let's say, or to the dollar sellers, or to people still being long dollars, that they need to do something about it. That may be the trigger. And then for the rest, as I said, I mean, I'm in the crosses. I think Euros is still one that merits a bit of a watch. It had seen a rally on the sell-off of the stock markets, and it's calming down and looking a little weaker right now. So yeah, that's one that I'm keeping an eye on. And for the rest, trade as it comes. I would like to buy another dip in silver, because all those levels in the 36s, etc., they are really holding. We are not going for the big retest of the 35. It really looks to me that it's trying to hold pretty firm there.
All right. All right. Very good. Just really quick. We got a little bit of trade balance data coming out here in just a few minutes. US and Canadian trade balance, which then those numbers might get start to get a little wonky pretty soon. I did sell my dollar Canadian this morning. If you're in the trades room, I took it off. I was very clear in the week ahead video, buying it below 137.80. But I got out of it because of the data that's coming out today. I'm like I think Ryan was just talking about it. I am still very interested in the dollar CAD. I'm interested in playing it to the long side, but if we do now break below 137.50, I'll have to play it on the short side. But I'm open now with everything that's happening. By the way, U.S. trade balance has improved. Canadian trade balance has is weaker, and this is direct, probably a
Effect
direct
of
effect of
tariffs.
tariffs. Yep.
Yeah.
Yeah,
Yep.
big swing. Exports were down 4% last month. They're down 0.5. Imports were down 0.1. They're down 3.7 this time. So yeah, we're June numbers. So we're coming out that April-May period of all the front running and whatnot.
All right. Well, before I pass it back over to Dale, because we have Jamie McGeever from Reuters who's here. Is he here yet?
Yeah, he's here. You'll
Oh,
have to
yeah.
promote him. Here's a
I
host.
made you host as
Oh,
well.
okay.
So,
All
yeah,
right.
maybe you can grab him.
I'll
But
grab
I
him.
want to hear from Stelios. Stelios, I wasn't listening to you earlier because I had the volume turned up listening to Trump because he was just starting to speak. Anything that you're focused on before we let you go? And nice to have you here.
By the way, I promoted Jamie.
I
Not
did.
really. I'm looking at yield same as all of you. And what I am looking to do is buy back the platinum that I sold about 1400. I've been looking for 1250, which is the 38.2 retracement of this big thrust higher. But if the number is weak today, then I don't think we're going to get there. I think we're going to go bounce off the 50 DMA and just keep going. So if it's weak, I'm going to get in straight away and buy it back. If not, I'm going to wait for a little bit of a dip to buy it lower.
So
But
this
not
right
much
here is
else.
the breakdown point. It's if we hit new
Yes,
trend lows,
1260.
then
Yeah, 1260 is the where's the fib is the 12.
it's there, same
Yeah,
level.
yeah. There
Yeah,
you go. There you go. There you go. Yeah.
yeah. Well, that makes
So
sense. So while it's above that 38% retracement, you're still looking at, hell. I mean, if you get some that, like this is if you're a precious metal bull, you're gonna love this with platinum. That'd be an
yeah.
A, B, C, D equal leg move, take you up to 1900. And hell, oh shit, my wife's wedding ring will actually be worth something again. That's great.
That's what I keep saying. When I got married 13 years ago, I chose the expensive platinum over gold, and now
Me
it's like
too.
a
Me
third of the
too.
price.
I haven't told my wife after 25 years that her, she doesn't know it's platinum. So, but platinum was the more expensive metal at the time.
Yeah.
Well, you
So,
could say you could have said white gold.
I mean, she doesn't know the
White gold.
difference. Doesn't know the difference. Anyway,
How about it? Did you confess to the rock was a
actually,
zirconium?
what's funny, Dale? When I married my wife, it was in the internet was in its infancy,
Yeah.
and I took a chance on a company called Blue Nile. Some of you might be familiar with that company. Blue Nile was one of the very first websites that ever popped up regarding, you can buy precious, diamonds. They
Yeah.
they sell them now. And it was like a significant discount. I want to say it was like 20% cheaper I could find it anywhere else. So
Yeah.
I took a chance, got it online. Then I took it right to Molina's Jewelers here in Paradise Valley and Scottsdale. And they're like, that shit's real. And I'm like, damn.
Yeah. Nice.
So,
Nice.
so it wasn't cubic zirconia, but I was
Yeah.
taking a chance because
Yeah.
that was in like the 90s. So
Yeah.
internet,
Who knows? Yeah.
yeah, you're like, okay, I'm buying something over the internet. And,
Yeah.
it wasn't like, it was a five-figure number. So anyway, crazy.
Good
Anyway, yeah,
story.
yeah.
All
So,
right.
all right. You have your guest here. So
Yeah.
let's,
Jamie's here.
yeah. All right.
All
You
right.
guys
So
had a great interview.
let's roll, Jamie. How are you, buddy? Thank you, team.
Thanks, Coach.
Good morning, Dale. Can you hear me okay?
Yeah, I got you, Jamie. So why don't we start with the elephant in the room, and that's the firing of the head of BLS, and for a bad number. And it really was a good number. It just was a revised number. It's not like there was anything wrong with the number. What's your take on that? Something like this, which is kind of we're talking gemstones. This particular agency, or whatever you want to designate it, has been around since the late 1800s. So it's it's an
It's,
important institution, right?
well, you would have thought so, but not everybody seems to treat it as such. I mean, beyond the obvious, implications and the signals it sends for political interference, etc. I mean, it's kind of, I mean, it was a shock. I don't think anybody wasn't shocked. But given what Trump has, what he said about Powell, for example, and the overt pressure that he seems to be putting on him and the Fed, I mean, I suppose it wasn't a total surprise. However, as you say, it's been around since the 1800s, and this is the first time, as far as I can see. Actually, that's not true. I read somewhere that I think Hoover in the 30s fired somebody from the BLS or put heavy pressure on someone to force someone out from the BLS. So it's not unprecedented, but it's certainly unprecedented in modern times. And
Well, I mean,
you,
if that's a metaphor and it's Hoover,
well,
that's not a great
maybe.
sign. It's not a great sign. I think there were cities called Hoovervilles back then, Jamie. So I don't think the
Maybe not the
president would
connection you
like.
would like.
Yeah, I don't think he'd like being compared to Herbert. Maybe Calvin Coolidge, but not Herbert Hoover.
But yeah, and I mean, that's just on the number themselves. I mean, I think haven't seen or read or haven't heard from anybody or read anyone who, I mean, on both sides of the aisle, it has to be said. I mean, I'm getting emails and research notes from, diehard Republicans, lifelong Republicans, and they're saying this is a step too far, in terms of economics and how
Yeah.
The separation between government and independent institutions. They're saying this is just, this has gone too far.
Don't you think it
So
would
it's,
have been?
it's not a political thing.
Don't you think that this is something that Paul could have made a statement about, since they depend on it as well?
Well, I think he was asked at the press conference. Obviously, this was before Trump's intervention on Friday, but he was asked
Right.
on Wednesday. When did he give his press conference? It was
Yeah,
Wednesday.
that was it. Yeah.
Well, it seems like a long time ago. He was
I
asked
know.
about the quality of data coming through. I think it was more to do with the PCE and CPI. There are question marks over the reliability of the input data into inflation. And he said, look, we basically we do the best. We deal with what we are given. It's not his place to comment on other institutions. But he said the Fed deals with it as it comes in. I wouldn't have expected him to comment on other institutions, and certainly not on Trump's comments. He's made it quite clear he's standing aloof or apart from the pressure that he and others are facing. And to be honest,
Yeah.
I thought his press conference, again, this was pre firing of the BLS official. I thought his press conference was quite impressive.
Yeah.
He batted away questions about Trump and everything that we've seen and heard, and that that clip of them both standing together with the hard hats. I mean,
Yeah.
that was quite amusing,
that
if nothing else.
I was
But
glad that they weren't going up on the roof of any big building. Those two guys.
well,
I'd
there
be
were
worried
cameras
about.
there. There were lots of cameras there.
Yeah. So okay. So
But just
BLS.
on the numbers
Go ahead.
themselves. I mean, obviously, it grabbed a lot of headlines, and I think you've probably seen the stat that Goldman and others have pointed out that out with recessions, excluding recessions, this was the biggest downward revision, May and June, 2-month revision since 1968. So it's quite a landmark. However, having said that, the data themselves, average earnings rose. The work week hours worked rose. The unemployment rate, 4.2%, is still historically low. I mean, that's basically, as Powell said, it's basically full employment. And interestingly, it's worth noting that, you know, payrolls numbers, payrolls growth, and household survey numbers, etc., they can all be revised, and they are revised as we're seeing. However, the unemployment rate is not revised. That's constant. And Powell said, as far as he's concerned, the unemployment rate is kind of the lodestar when it comes to indicators about the job market. That's the most important one and most accurate as far as he's concerned, and that's not revised, and that's down at 4.2%. If that starts to rise, then we've got a debate on our hands about what the Fed should do.
Okay, what do you think the Fed, when it sees signs and say this is followed up in the next couple months with negative job growth, that he'll not worry about letting inflation run hot?
Well, that's the point I think Waller and Bowman have made, and that's why they dissented. And it's worth noting that it was the first time since 1993 that two rate setters dissented. So again, that's another landmark. So we're in interesting times, as if we didn't know. But I suppose the Fed's job is to maybe, as they would argue, to act preemptively. And Powell seems to be looking at the unemployment rate, amongst others, but giving special preference to that. And if you look at the unemployment rate, we're just not seeing any signs of big cracks in the labour market. Of course, it's worth noting that the unemployment rate is kept low because labour supply is falling. Immigration is down, and those kind of workers seem to be falling out of the workforce altogether. You can argue that's not a healthy sign long term for the labour market.
So the reason we have full employment is because the supply of labor is dropping.
Coming down, yes, yeah, and so the break-even level of payrolls growth, maybe in the past there was 150,000, 200,000 a month required to keep the unemployment rate stable. That's much lower now. I mean, there's some estimates that it could go down to about 50,000, between 50 and 100,000 next year. So low payrolls headline figures in themselves aren't necessarily, quote unquote, bad and red flags for big problems in the jobs market. And low numbers like that can still be consistent with low unemployment rates.
And maybe the labor participation rate, besides immigrants leaving or being deported, or people have given up looking for jobs.
Those are not good signs long term, but but in the short term they can help keep a cap on the unemployment rate, and I think that's what we're seeing now.
Okay.
And yes, the labour force participation is down to 62%. I think it's coming down. It's the lowest in a couple of years.
Okay. So there are people, they've probably gone out and they're saying, see how long I could live on my unemployment. So we need to move to tariffs, and things keep changing.
Day by day, it seems.
Yeah. So, but let's just say wherever we are today, we're there. What do you believe are going to be the economic impacts of tariffs, Jamie? And is it going to be enough to create a slowdown? Is it going to be a drag on growth? Do you look at the analogy between Smoot-Hartley when we went from 5 to 20, and now we're going from 3 to 17? It's kind of similar, eerily, to the same rate as we had in the 30s.
Absolutely. No, I mean, that's we can debate many things and argue the toss over many points with the tariffs, but one thing that you can't argue is the absolute level of the effective average tariff rate, which, if it's between 15 and 20%, that is undisputably the highest since the 1930s. That's obvious. What's the impact on that? You would think, or economics orthodoxy would tell you that that's a drag on growth. It's a tax. Ultimately, it's a tax. Tariffs are a tax. Who pays that tax is is a question. Is it the importer? Is it the retailer? Is it the exporter? Ultimately, I think what we might find is that it's probably more or less it's the consumer.
Yeah.
And so that's a tax on. I think I read some JP Morgan guys, analysts. I think their calculations were it's a 1% tax on the consumer, or 1%, something like that. So it's a big, it's a hit. And it's these guys, the economists at JP Morgan, I think they estimated that it's the biggest tax on the consumer since 1968. So we seem to be going back to 1968 a lot.
And what was that? Steel?
That's a drag on growth, and I think we saw it in the first half of the year. The GDP growth, taking the 2 quarters in the first half of the year together, averaged about 1.1, 1.2%, and that's about half of the sort of growth rate in the previous couple of years. And economists expect that to continue in the second half of the year. So we're down to about 1.2% growth. It's not particularly strong at all, is it? And the question is, does that continue, or is this a one-off hit to prices, or is it a sort of more permanent inflationary? Does it get built into consumer and business inflation expectations? That's what the Fed has to contend with, of course. And
all right,
I think it's a bit of a coin flip at this point.
Okay, it sounds like trading. Jamie, anyway, in the 30s, GDP was 9%. Global trade was 9% of GDP in the 30s. Any idea what global trade is a percentage of GDP nowadays?
Global trade in terms of global GDP?
No, US.
US,
for the
yeah.
US.
I think US is the US is a relatively closed economy, certainly relative to other big economies. I'd say about 15%.
Okay, so it's still higher than the 30s. Do you
it's
worry?
A guess, by the way. Don't take that as gospel.
Okay,
that's a guess. But now that trade, the US is maybe it's a surprise to some, but it's a relatively closed economy.
You would think with what the environment is and tariffs that we were wide open and everyone was taking advantage of us. That's a narrative here.
Well, it's certainly a narrative coming from certain reporters. Again, if you want, this can take you down many rabbit holes, but the whole idea that the US has been ripped off by the world for 40 years because the US has run a consistent trade deficit since the last 40, 50 years. On the other hand, the US has benefited from that trade deficit, cheap goods from abroad, exorbitant privilege for the dollar, the reserve currency, etc. All the capital inflows which have boosted Wall Street outperformance in US assets and kept treasury yields down for, again, 40 years. What side of that argument are you on?
Well, look,
what are the benefits?
I lived it. So, we were really in the sweet spot for many years because of this policy that has become evil. And we were ripped off, and this was during my lifespan. I saw the benefits of, cheaper goods and higher standard of living for a while, until the deterioration started, and mainly with everything costing more was what really changed it. People can't buy a house. People have to spend 50, 60, 70,000 for a car. Their car payments are as big as mortgage payments used to be.
Which is quite remarkable when you lay it out in black and white terms like that. No, certainly inflation changes the dynamic, doesn't it?
Yeah, you know what? I have a concern. Tell me if I'm, just being a little bit too, paranoid. But, with these tariffs, a lot of the shipping routes and everything has to be changed. It's not going to be the same type of the trade routes and where they're going to ship to, and maybe they'll ship to different places for different tariff treatments. Are you worried about supply chains during this transition? You know, people are worried about the prices of things, but they're not even thinking about you can't get things at any price.
No. Certainly, when you talk about supply chains, we saw it after the pandemic and the Russia-Ukraine war, and the burst of commodity price inflation. Well, 3 or 4 years back, shelves were empty in Walmart and stuff for certain goods, and if companies are having to reroute, as you say, their supply chains, countries on a national level are rethinking their trades relations with the US and other economic blocs and forging other ties, then yeah, most certainly supply chains will be affected to some extent. And we've seen in the last few years that can lead to a shortage of goods on the shelves. And what we're seeing now is that the tariffs, there are definitely early signs of the tariffs having an effect on goods price inflation. Services inflation is coming down and it's quite benign, yet goods price inflation is starting to tick up. And I think, again, if you take out the pandemic, goods price inflation in the first 6 months of this year rose about 1.7%. Doesn't sound a lot, but that's the biggest 6 months rise since 1987, I think.
Wow, that was a good year in October. I remember
Well,
that.
you'll remember that, but you'll also remember that the market closed higher that year.
Yeah, reminds me of April. So, right? We had the crash. That was a pretty good crash. It wasn't like October '87.
No, but it was pretty severe, and here we are, all-time highs.
Okay, are you noticing anything at the ports? Because I've read some articles that port activity was down, and then I read something else that they're just as busy as they were last year.
No,
Any
I've seen
idea?
it. I don't keep a close eye on that, but I've seen the same as you. You've seen some conflicting stuff.
Okay.
What we haven't seen are these video footage, drone footage of ships, whether it be in Singapore, we've got 400 ships, in a bay or off the coast of LA, just waiting to, get into dock. We haven't seen those videos like we saw again 3 or 4 years ago. So until we do, I suppose we're not in outright panic mode. Is that right?
Yeah. What are your thoughts about this recent dollar rally? Just a bit of people being on the wrong foot, being bearish a dollar and short covering, and the trend eventually will continue for a lower dollar, because there are some people talking about the potential for dollar shortages with emerging market debt.
Well, at the start of the year, we were led to believe that the tariffs would be dollar positive. Is that right? Am I recalling that correctly?
Yeah, right.
And of course, had
they want a lower dollar and tariffs, which compete against each other.
Exactly.
Right?
That was two opposing forces, and lo and behold, the first 6 months of the year, it was the worst the first worst 6 months start to a year since the year of free floating exchange rates. So more than 50 years ago, was it 11-12% fall in the dollar index? So clearly the dollar was oversold. All your technicals were pretty bearish, and sentiment was, uber bearish. So
the most in 20 years. So this was the biggest falls in Bretton Woods, and
yes,
and this is the most bearish I've seen out to 30 years. This kind of positioning is as bearish a dollar as.
Are you looking at CFTC data there? Is that CFTC?
It's a combination of positioning, and a big bank put this out that they found bearishness the highest in 30 years.
Right. So it's not a surprise then that at some point that's going to snap back, and you're going to get a short covering rally, and some of that those overstretched, oversold positions get tidied up. However, do you take a fundamental view of the dollar, or do you take a short-term view, a sort of more technically driven view of the dollar. If you think the Fed's going to cut rates and 2-year yields are coming down and short-term implied rates are coming down, yield spreads are going to compress, then the dollar's probably still a sell, isn't it?
Okay.
And that's what we're seeing. We saw on Friday, certainly, the US German 2-year spread narrowed by 20 bips in a flash. And it's the narrowest in, what, 4 or 5 months now?
Mhm.
So maybe some of the pressure on the dollar short term is still to the downside.
Yeah, I mean, I'm looking at it this way a little bit, Jamie, where we came down from 110. This was the announcement of tariffs. I remember it was in my face that morning. So we had a pretty good break, 1,400 points. So, markets can correct 50% and still be in a bear market. And
Right.
I think they have to still shake out some dollar bears before we get another good break and lose our reserve currency status. All right. So,
Well, I'm glad you mentioned that because if it depends how much store or value you put into the tick data and flow data like that. But the last tick data, and I know it comes with huge caveats, is lagged by 6 weeks, 2 months. But it was certainly a surprise to me. But foreign demand for US assets, for treasuries, including treasuries, not just equities, but agency debt, corporate bonds, equities, and treasuries, foreign demand in May was at or close to or at all-time highs. In fact, I think the private sector, if I've got this right, private sector inflows, net purchases of US assets, all assets, was a record $280 billion in May. So this narrative about de-dollarization, the dollar losing its reserve currency status,
is baloney.
Does seem a bit overblown or certainly a bit premature if you go by these numbers. So it'll be interesting to see the TIX data for June and July and see if that's continued or if that was a one-off. But certainly foreign demand for US assets, and we're seeing it in, as we were talking about earlier, we're seeing it on Wall Street. I mean, money's still pouring into the US.
Okay.
And I said, and one of your guests or one of your colleagues was saying before I came on, talking about the 10-year yield, 4.2%.
There it is.
If you think US debt, deficits, treasury supply, term premium going through the roof, worries about the fiscal outlook, trillions of dollars being added to the debt, yeah, and you've got a 10-year yield at 4.2%. That doesn't scream panic to me.
Okay. So it's really going to matter if this move follows through. And this is a huge triangle. And my bet is, now I think the bonds have more left in them. I think they're going to take out this high here, see what they do around 90. But I'm thinking that the 10-year is going to bottom above this low.
What was that?
That's about 390. I have
390.
410. Yeah, I 410 for a target. It was Head and Shoulders, Jamie, textbook stuff. Here's the head. Here's the left shoulder, right shoulder. So it measures 410. And then I think that might be about it. Let's wrap it with this. What's Paul going to do in September? Come on, put on your Paul mask and tell me.
Given everything we've seen and heard and the developments of the last 4 or 5 days, if the Fed, let's not put it all on him because he's one of 12 voters at any FOMC meeting.
All right.
If the Fed was to cut rates in September, do you think the market would? How do you think the market would react to that in terms of what it says about
yields would go up yields would go up like last time?
Why?
Because there's going to be a fear of
inflation,
where you have QE and we won't know in September what the full effects of the tariffs are by then. So that's my opinion.
Fair. I would suggest that if that would be seen to be caving into the pressure.
Trump, right?
Yeah, and
So
that's not a good look either. So
all right.
that I think that would be hugely problematic and
Okay.
a difficult one to explain away.
Well, there are some good trades setting up because the market's trading like that's going to happen. So if it's not going to happen, it means people are leaning the wrong way, looking for this to happen, just like what happened here in the last couple weeks. They were
No, the
anticipating.
market is certainly going that way. No question about it. I
Yeah,
think we're what 80, 90% nailed on for
yeah,
September, and another 25 by the end of the year is, more than baked into the cake.
yeah,
But I think the optics of given what Powell said on Wednesday, the
yeah.
optics of that. Now, of course, we've got another payrolls and maybe one more PC and one more CPI. So we do have data between now and then. But I think the optics would be pretty poor indeed, and I'm not sure not sure the market would take kindly to that. And it's
That's what
also
I
worth
mean. It
pointing out, just before we wrap up, that financial conditions
tighter.
are the loosest in about 3 years.
Okay, even
If
with
you
the
go by the
dollar
Goldman
rally.
Sachs
Oh,
FCI,
so the
yeah, the
dollar
dollar.
rally hasn't really put any pressure on.
Well, the 2-year yields come down a lot, and Wall Street's at all-time highs. So you throw that all into the mix, and overall financial conditions, going by the Goldman index, is we're close to the loosest financial conditions in about 3 years.
Okay.
Can the Fed be lowering rates in that environment?
Yeah. So why don't we wrap it with this, because you make great calls in the euro between interviews. We're at 115.40. Where are we going to be by the next time you and I talk?
In
115.40
3
is the
months,
euro.
115, yeah, 115.40. So that's
109 or 110 or 120.
I was
Those are
going to
your
say, is it
choice.
110 or 120? Oh, God, you put me in the spot.
Welcome to my world.
Yeah, but that's your job, is to make forecasts. My job is to write about
Well,
forecasts.
I want you to know what it's like to walk in another man's shoes.
Okay, I'll go for 110. I
10.
think the dollar. I think the Fed. I think if Powell stands his ground, well, I say Powell. I mean, if the Fed stands his ground, and I actually wrote a piece after his press conference on Wednesday, and I thought it was a good piece at the time. By Friday, it was probably the worst piece I've ever written. But it was saying that we may have seen the last rate cut under a Powell-led Fed.
You said it could still be a good article. I think, did you publish it?
Yeah,
Oh,
it's out
well,
there.
you know what? Like everything, the tincture of time, it'll season well in September.
Well,
Okay?
it's seasoned well for 24 hours.
Yeah,
But if Powell and the Fed hold their ground, hold the line, and they don't cut in September, uh, and inflation stays around 3%, and markets still hold above all-time highs, we could see those rate expectations start to melt away, and if that's the case, the dollar could maybe have a bit more life in it yet.
that's what I'm thinking. Great talking to you, Jamie. Man, we covered the whole landscape. And uh, I I'm edified every time I talk to you. Thanks for coming here and doing this for our community. You need to follow Jamie on X at Reuters Jamie and go to
I don't post
Reuters.
anymore, Dale.
Don't what?
I don't post anymore on X.
Oh, all right. Oh, you got off it? Okay.
I'm not
So,
active there. I
all
just
right.
look.
All right. Well, I know how to get on.
Reuters.com.
Yeah, it could get on your nerves.
Reuters.com is where
All
you
right.
can find all
All
the
right.
stuff.
All right. So, let's face it, Jamie's on a mental cleanse. I don't blame you, buddy. All right, you get rid of all that toxic stuff that you get on X. I know it's ridiculous. I'd like to join you. Anyway, thank you, Jamie, so much for being here and sharing what your hard-earned knowledge with us and your hard
Pleasure,
work.
Dale. Always a pleasure, and look forward to the next time.
All right, Jamie McGeever, everyone. Follow him, Reuters.com. Read his articles and the people that he works with. Reuters is, one of those names that has credibility for many, many decades. And Jamie's doing a great job of carrying the torch for them. So I'll see everyone tomorrow. Remember, don't just count your news articles, count your blessings, and see everyone tomorrow. Good hunting. Thanks once again, Jamie. I'll see you in the fall, bro. We'll see
Remember, 110 on the
110.
euro. 110,
Yeah.
yeah.
Okay, I'm with you. I'm selling a rally. So that's a wrap, everyone. Cheers. You're welcome. People are thanking you, Jamie. And that's a
Thank you.
wrap. And you could join the team in 10 minutes on the Morning Edge. Adios.